Assalamualaikum and greetings to all our fellow friends and Dr. Saada. We are from Rarity Group. Today we will be presenting about reducing balance method, which is also known as kaedah bagi berkurangan in Malay. I will start by introducing our group mates, which is Nuriana Fatin, Izzati Nabila, Tipa, and also me, Rusiana Dwana binti Ruslan. So the meaning of depreciation is the systematic allocation of an asset cost over its useful life to reflect wear or loss of value. Depreciation is also the process by which assets lose value over time until their worth is zero or becomes zero. Okay, for example, if you purchase a piece of machinery for a company at a total cost of 1,000 ringgit, the average useful life of that piece of machinery is 10 years, so it would decrease in value by 10% each year. Moving on to accumulated depreciation. So the meaning of accumulated depreciation is the total depreciation expense recognized on an asset since its acquisition. It also represents the spend cost of the asset. For example, at the end of the third year, accumulated depreciation on the truck is 18,000 ringgit from an original cost of 30,000 ringgit, resulting in a net book value of 12,000 ringgit.
There are two methods to calculate depreciation expense, which is straight line method and reducing balance method. So this is the formula that will be used to calculate reducing balance method, which is original cost we minus with accumulated depreciation, close bracket we multiply with depreciation rate, and then we will get current depreciation for each item of non-current asset. So let's take a look for question number 1. Jen Lang buys and sells furniture. The following balances were extracted from her books at the end of her financial year on 31st December 2010. So in this trial balance, we will focus on these items, which are motor vehicle, building, office equipment, and accumulated depreciation for motor vehicle and building. Okay, after we read the question and take a look in the trial balance, the important part we need to check is additional information. But in this chapter that we covered is we focusing on reducing balance method. So let's take a look in the question number 5. They given a provision for depreciation on non-current asset using reducing balance method are as below. So 50% per annum for motor vehicle. So the other words for per annum is per year. So the second one is 30% per annum for building, and lastly 40% per annum for office equipment. So in this question, we required to prepare the first one is general journal, the second one is general journal, the third one is statement of profit or loss and other comprehensive income for the year ended 31st December 2010, and lastly we need to prepare the statement of financial position as at 31st December 2010. So the first step we need to calculate is current depreciation for each three items, which is motor vehicle, building, and office equipment. So here's the formula to calculate the depreciation, which is rate we multiply with net book value. So how to get the net book value, which is asset cost we minus with accumulated depreciation. So we focus on the motor vehicle first. So 48,000, which is original cost, we take from the trial balance, and accumulated depreciation for motor vehicle is 24,000, also we take in the trial balance, and lastly depreciation rate 40% per annum. This is we get from the additional information. So we take the amount we put into the formula. So here's 50% multiplied with close bracket 48,000 or original cost we minus with accumulated depreciation 24,000 close bracket, and then we will get 12,000, which is the current depreciation for motor vehicle. Reminder to always put bracket during the calculation, or not you will not get the actual amount for the current depreciation, because this is the mistake that is often made by students. They didn't put the bracket, so they will get the difference amount for the current depreciation. we using the same method for building. We take the original cost 105,000 in the trial balance, accumulated depreciation building 45,000 also in the trial balance, and lastly depreciation rate 30% per annum in the additional information. We put the amount into the formula, so we will get 18,000 for current depreciation building. Lastly, for office equipment, we take the original cost 82,000 in the trial balance, but for this item it's a bit different because we don't have the beginning balance for accumulated depreciation in the trial balance, so we will put 0 for the accumulated depreciation. So next, depreciation rate 40% per annum we take from the additional information, and then we put into the formula. 40% multiplied with open bracket 82,000 minus with 0 because in the trial balance we don't have the beginning balance, or if you have the confidence you can just multiply the percentage of rate with the original cost. We will get the same amount, which is 32,800 for current depreciation for office equipment.
My name is Zatina Bila, so I will proceed to our first requirement, which is prepare general journal. Firstly, we need to debit depreciation expense motor vehicle 12,000 because it will increase our expenses. And then we need to credit accumulated depreciation motor vehicle 12,000 because it is a contra asset account. Then the description is recording depreciation expense for motor vehicle. Same goes for building. Debit depreciation expense building 18,000 and then credit accumulated depreciation building 18,000. The description is recording depreciation expense for building. And the last one is depreciation debit depreciation expense office equipment 32,800 and then credit accumulated depreciation office equipment 32,800. And the description is recording depreciation expense for office equipment. After recording the general journal, we have to open two general ledger, which is depreciation expense and also accumulated depreciation. For the first one is motor vehicle, we need to open ledger for depreciation expense motor vehicle. We need to debit accumulated depreciation motor vehicle 12,000 and then credit profit or loss 12,000. Next, we need to open ledger for accumulated depreciation motor vehicle. We need to credit balance BD 24,000 and actually we can get this amount from the trial balance. And then credit depreciation expense motor vehicle 12,000. Total up and then we will get 36,000. So this 36,000 will become our balance CD and also our balancing figure. So for 2011, January 1st, it will become our balance BD. So our second non-current asset is building. We need to open ledger for depreciation expense building. So debit accumulated depreciation building, which is 18,000 and then credit profit or loss 18,000. Then we need to open ledger for accumulated depreciation building. We put balance BD, which is 45,000 on the credit side, and this amount we can get from in the trial balance. Then we need to put depreciation expense for building 18,000 on the credit side. So when we total up, we will get 63,000. So it will become our balance CD, and then for the next year, during January 1st, it will become our balance BD. And the last one is office equipment. We need to open ledger for depreciation expense office equipment. Then we put accumulated depreciation office equipment on the debit side, which is 32,800, and then credit profit or loss 32,800. Next, we need to open ledger for accumulated depreciation office equipment. So actually office equipment is kind of different from building and motor vehicle because on the credit side, we didn't have beginning balance. So we just credit depreciation expense office equipment 32,800. And then on the debit side, we write balance CD 32,800. For the next year, 2011, during January 1st, it will become our balance BD.
So after we prepare the general ledger, we need to prepare the statement of profit or loss and other comprehensive income for the year ended 31st December 2010. So firstly, we need to write down the title, the name of company, and followed by the statement of profit or loss and other comprehensive income for the year ended 31st December 2010. So kindly reminder to always put the title correctly because it will count as your mark. Take the depreciation expense for the three items, which is motor vehicle, building and office equipment. We put it under expenses because as you know, depreciation is an expense to the asset for our company, so it will reduce our asset. This is how we record it in the profit or loss. So for the depreciation expense, motor vehicle, 50% that we get in the additional information times with the close bracket 48,000 original cost of motor vehicle we get in the try balance, and then we minus with 24,000 which is accumulated depreciation also we get in the try balance, and then close bracket we will get 12,000 which is the new value for motor vehicle. We will use the same method for building and we will get 18,000, and for office equipment we will get 82,800. Actually we already calculated in the first step, and we just take the amount of new current depreciation for each item into the statement of profit or loss. Lastly, we will prepare the statement of financial position as at 31st December 2010. And firstly, we need to put the title as the previous slide, Zhang Lang, which is the title or the name of company, and then followed by the account that we will open, statement of financial position as at 31st December 2010. For the statement of financial position is a bit different from the previous statement of profit or loss because in this financial position, we will put the calculation of accumulated depreciation for each item. These three items, we will put it under the non-current asset because these three items are not easily converted to cash within a year. So we will put it under the non-current asset. In the financial position, we will open the two column, and the first column we will put the original cost and then we minus with the accumulated depreciation, and then the second column we will put the net book value for each non-current asset. First non-current asset is motor vehicle. We take the 48,000 which is the original cost in the try balance, and then we minus with the accumulated depreciation 24,000 we take in the try balance also, and then we plus with the 12,000. This value 12,000 we get in step 1 current depreciation, the new one, so we will get 36,000, and then we minus the original cost with the accumulated, and then we will get 12,000 which is the net book value for motor vehicle. We using the same method for building and office equipment, and then for building we will get 42,000, and for office equipment we will get 49,200, and then we will total up for the net book value for three items, and then we will get 103,200 for non-current asset.
Hi everyone, have a good day. My name is Deepa Leshmanan, and now I'll be explaining to you all about question number 2. So let's take a look. Jane Lang buys and sells furniture. The following balances were extracted from her books at the end of her financial year on 31st December 2012. Okay, so the difference between question number 1 and question number 2 are based on the years, and in question number 2, the value will be more higher compared to question number 1. So we will be focusing on these things, which are motor vehicles, building, office equipment, accumulated depreciation for motor vehicles, accumulated depreciation for building, and accumulated depreciation for office equipment. Always remember, before we calculate, we have to take a look with the additional information first. So additional information number 5 is related to our question, and let's take a look. A provision for depreciation on non-current asset using reducing balance method are as below. 50% per annum for motor vehicles, 30% per annum for building, 40% per annum for office equipment, and we are required to prepare general journal, general ledger, the statement of profit or loss and other comprehensive income for the year ended 31st December 2012, and the statement of financial position as at 31st December 2012. The first step is we have to calculate the depreciation rate for motor vehicles, building and office equipment. So let's calculate for motor vehicles first. So let's take a look with the formula. Net book value, we have to times with the asset cost and minus with the accumulated depreciation. So first we have to take the value of motor vehicles, which is 48,000 from the trial balance, and accumulated depreciation for motor vehicles 42,000 from the trial balance as well, and the depreciation rate 50% per annum, where you can find this from the additional information, and this is how we will calculate it. 50% times with the asset cost, which is 48,000, and minus with 42,000, which is the accumulated depreciation, and the new value depreciation rate for motor vehicle is 3,000. Next, we will be calculating for building. So building, the value is 105,000, where you can get it from the trial balance. Accumulated depreciation building 75,600 from the trial balance as well, and the depreciation rate 30% per annum from the additional information, and the same method 30% times with the asset cost 105,000 minus with the accumulated depreciation 75,600, and the new depreciation value for the building is 8,820. Lastly, for office equipment, 82,000 from the trial balance as well. Accumulated depreciation of office equipment 52,480, you can take it from the trial balance as well, and the depreciation rate 40% per annum from the additional information. So 40% times asset cost 82,000 minus with accumulated depreciation 52,480, and the new depreciation value for office equipment is 11,808.
So there is also an alternative calculation that we can use for office equipment. Firstly, prepare a table that consists 4 columns, which is for year, depreciation expense, accumulated depreciation, and also book value. For the row parts, include the year they started to use the asset until the current year of depreciation. Leave one row below the book value column to put the original cost of the asset, which is 82,000 ringgit. Based on the additional information, 40% will be used to calculate depreciation expense. So for depreciation expense, we will use 40% times with 82,000 ringgit, which is we can get from book value, and it will equal to 32,800 ringgit. Since 2010 is actually the first year they purchased the asset, accumulated depreciation will be the same as depreciation expense. Original cost will deduct with accumulated depreciation, and we will get 49,200 ringgit for book value. So for 2011, we will apply the same thing, which is 40% times with 49,200. We will get 90,680 ringgit. So for accumulated depreciation, we have to use accumulated depreciation for the past year, which is 2010. Plus it with 19,680 ringgit, and we will get 50,480 ringgit. For the book value in 2011, we have to use the original cost, which is 82,000, minus it with accumulated depreciation for 2011, which is 52,480 ringgit. So we will get 29,520 ringgit. Lastly, for 2012, 40% times with 29,520, and we will get 11,808 for depreciation expense for 2012. So accumulated depreciation, use accumulated depreciation for 2011 plus it with depreciation expense for 2012, we will get 64,288 ringgit. Moving on to book value, we have to use the original cost, which is 80,000, minus it with accumulated depreciation, 64,288 ringgit, and we will get 70,712. Based on the question, they asked to prepare the general journal. So for the first one, we have to debit depreciation expense motor vehicle because depreciation expense has increased 3,000 ringgit, and we have to credit the accumulated depreciation for motor vehicle 3,000 ringgit. Accumulated depreciation is actually a contra to non-current asset. So under the accumulated depreciation, we have to write a description which is recording depreciation expense for motor vehicle. Same goes with depreciation expense for building, debit, and credit accumulated depreciation for building. And write recording depreciation expense for building. And the last one, depreciation expense office equipment, debit, 11,800 ringgit, and credit accumulated depreciation office equipment, 11,808 ringgit. And write recording depreciation expense for office equipment in December 31st for 2012.
Okay, so now I'll be teaching you all how to prepare the general ledger. So let us take a look. For motor vehicle, you have to open these two respective accounts, which is depreciation expense motor vehicle and accumulated depreciation motor vehicle. So this will be the table for ledger. So let us first focus on the depreciation expense for motor vehicle. So you have to debit the accumulated depreciation motor vehicle, which is the value will be 3,000, and this value you have already calculated in step 1, which is the new depreciation value for motor vehicle. And you have to make it balance on the credit side as well, and you can return it as profit or loss because this amount will be recorded then in the statement of profit or loss and other comprehensive income. So next, let us take a look with the accumulated depreciation motor vehicle account. So you have to credit the balance BD, which is 42,000, and this amount you can get it from the trial balance. And next, you have to credit the depreciation expense for motor vehicle as well, which is 3,000, and you have to plus this both and you will get the value of 45,000, and you have to make this balance on the debit side as well, and you can record it as balance CD 45,000. And once you have get the value, you have to bring it down to the credit side and you can record it as balance BD 45,000. Next will be for building. So for building, you have to open these two respective account, which is depreciation expense building, accumulated depreciation building. So let us focus first on the depreciation expense building. So you have to debit the accumulated depreciation for building, which is 8,820, and this value you have already calculated in step 1, which is the new depreciation rate for building. And you have to make it balance on the credit side as well, and you can record it as profit or loss. So next, we can take a look with the accumulated depreciation for building. So you have to credit the balance BD 75,600, and this value you can get it from the trial balance. And you have to credit the depreciation expense for building, which is 8,820, and once you plus this both, you will get the value of 84,420, and you have to make it balance on the debit side as well, and you can record it as balance CD, and you have to bring down the balance for January 1st on the credit side, and you can record it as balance BD 84,420. Lastly is office equipment. So for office equipment, you have to open these two accounts, which is depreciation expense for office equipment and accumulated depreciation for office equipment. So let us first see for the depreciation expense for office equipment. You have to debit the accumulated depreciation for office equipment, which is 11,808, and this value you have already calculated in step 1, which is the new value for depreciation of office equipment. and you have to make it balance on the credit side as well, and you can record it as profit or loss. So next will be for accumulated depreciation of our office equipment account. So you have to credit the balance BD, which is 52,480, and this value you can get it from the trial balance, and you have to credit the depreciation expense for office equipment, which is 11,808, and when you plus this both, you will get the value of 64,288, and you have to make it balance on the debit side as well, and you can record it as balance CD, and you have to bring down the value for the next year, which is 2013, and you have to record it as balance BD 64,288. Next, we have to prepare the statement of profit or loss and other comprehensive income for the year ended 31st December 2012. So firstly, don't forget to write the title, which is Jane Lang, and followed by the statement of profit or loss and other comprehensive income extract for the year ended 31st December 2012. Okay, so secondly, we have to record it under expenses. Why we have to record it under expenses is because, as you can see, motor vehicles, building and office equipment are considered as expenses. So this is how you have to record it. So depreciation expense motor vehicle, 50%, which you can get it from the additional information, and you have to times with 48,000, and this value you can get it from the trial balance, and minus by 42,000, which is the accumulated depreciation, you can get it from the trial balance as well, and the new value you will get is 3,000. So we have already actually calculated this in step 1, so you can just take the value from step 1 and you can insert it here, because these are the new values of depreciation for each motor vehicle, building and office equipment. So for building, it will be 8,820, and for office equipment will be 11,808. So you have to minus all these expenses. Lastly, we have to prepare the statement of financial position as at 31st December 2012. So first, we have to write down the title, which is Jane Lang, followed by the statement of financial position extract as 31st December 2012. So let us take a look on how to record. So first, we have to record it under non-current asset. Why we have to record it under non-current asset is because motor vehicle, building and office equipment are considered as non-current asset. So first, you have to take motor vehicle, which is 48,000, and this value you can get it from the trial balance, and you have to minus with accumulated depreciation of motor vehicle, which is 42,000, you can get it at the trial balance as well, and you have to plus with the new depreciation value of motor vehicle, which we have calculated in step 1, and this will be the value 3,000. So you have to plus this both and you will get the new value of 45,000, and now you have to minus with the motor vehicle and you will get the value of 3,000, and you can write it on the next column. So next will be for building, 105,000. This value you can get it from the trial balance as well, and you have to minus with the accumulated depreciation for building, which is 75,600. This value you can get it from the trial balance, and you have to plus with the new value of depreciation for building, which is 8,820, and when you plus you will get the value of 84,420, and you have to minus with the building and you will get the new value of 20,580. And lastly is office equipment, which is 82,000. Same goes there, you have to take it the value from the trial balance, and you have to minus with the accumulated depreciation of office equipment, which is 52,480, and this value you can get it from the trial balance as well, and you have to plus with the new value of depreciation, which is 11,808, and you will get the value of 64,288, and you have to minus now with the office equipment, and you will get the new value of 17,712, and you have to plus all these values and you will get the total of non-current asset, which is 41,292. Based on the analysis, so we can take a look with the similarity for question number 1 and question number 2. Both sets use a consistent approach to recognize depreciation, applying the same percentages, which is 50% for motor vehicles, 30% for buildings and 40% for office equipment. using a reducing balance method. This simplifies accounting across all categories. And for the difference, from 2010 to 2012, accumulated depreciation consistently rose for motor vehicles, buildings, and office equipment. For example, motor vehicles depreciation increased from Rm24,000 to Rm45,000. Building depreciation went up from Rm45,000 to Rm84,420, and office equipment saw an increase from Rm32,800 to Rm64,288. These trends indicate ongoing growth in accumulated depreciation, reflecting the aging and wear of assets over the 2-year period. Thank you.